Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Joining us now, he is the mayor of New York City. We have a 2-hour conversation to squeeze into a polite 20 minutes, and there are many, many topics to talk of. I want to talk of the immediate news. My father came home to College Point, Long Island, and the distance was LaGuardia. What a celebration for New York, the rebuilding of LaGuardia. Halfway there is Bayside High School, where you used to darken the door. And let's not mince words, it was a challenge, Mayor Adams, a few years ago. I want you to speak right now to the teachers of Bayside High School who went with the other guy yesterday in their union endorsement.
Well, when you look at what we were able to accomplish here in the city, we've outpaced the state in reading and math, got so much more to do. But also we're developing the fullness of our children, teaching them meditation, breathing exercises, healthier food to eat. So our children are not only academically smart, but we want them to be emotionally intelligent. And at the same time, what we have done in our educational system for 130,000 children in pre-K, 3K, the universal after-school program, and paid our teachers a darn good union contract to make sure that they're having the wage that they deserve.
My youngest child, Afterthought, went to a school with 11 languages in first grade. You have Ackman and Loeb, Wall Street support. They talk charter schools. Can you reaffirm here a better education system away from union dynamics and the silliness of it all?
So important. When you think about when a parent drops their child off to school, they're not asking if it's a charter school, if it's a parochial, if it's a barter school. They want a quality education in a safe environment, and that is what we've produced. And union heads don't always speak on behalf of the rank and file teacher population. I know those teachers appreciate what I have done as the mayor and what this administration has done, and many of those teachers will be voting for me.
Mr. Mayor, what statement were the Democratic voters making when they selected Mr. Mamdani in the primary, maybe here in New York City, certainly, but maybe even nationally?
Let's examine this, and I think there's something that has been not really understood. 9% of voters voted. 9%. 91%, they have yet to speak. 2.5 million Democrats, 1 million independents, several 100,000 Republicans. This is the moment when we're going to see what New Yorkers want. Do you want someone who defund and disband police departments? Do you want someone that's telling high-income earners to leave our city without understanding the economics that they bring? Do you want to stop our progress in one of the healthiest economies we've ever had and public safety? He wants to empty Rikers Island. 7,400 of the most dangerous people in our city. He wants to empty Rikers Island and have them come back to the communities that they offended. And so New Yorkers are going to be able to hear clear messages of what the future looks like and what that future looks like under him.
Current polling, slingshot strategies have Mr. Mamdani at first at 35% of the vote, Governor Cuomo second at 25%, Mr. Sliwa 14%, and you at 11%. What does that poll tell you, and what do you need to do to change those numbers?
It tells me don't listen to polls. Okay. 2021, they had me 13% behind Andrew Yang, 13% behind Andrew Yang, and we're not calling him
But you
Mayor
were not
Yang.
behind Governor Cuomo. What do you need? Have you spoken to Governor Cuomo yet in this turmoil?
Communicated with him several times. Andrew has a history of doing things when it comes down to African-American candidates. He did it to Carl McCall when he ran for governor. He did it to David Patterson when he
who spoke recently.
Exactly.
Blistering.
He did it to Charlie King when Charlie King ran for AG. He did it to Keith Wright. He has a history, and I think the difference
of supporting or
not sabotaging that race and
okay.
trying to compel them to get out of the race. He underestimated Eric Adams, a former cop that knows what a bully looks like. And I am going to complete this race. My campaign has just started. I have not been campaigning. and
Right.
not have an opportunity to speak to voters.
You're going to complete this. Let's be clear, folks, particularly for our national audience. Eric Adams with us here at this interesting time for the city and, of course, for the nation as well. Thank you for joining Bloomberg Surveillance on television and radio. Mayor Adams, but the critical distinction here is the timeline to the election. When does the Adams-Cuomo tension need to get fixed to come to an efficacious outcome for the people against Mr. Mamdani?
Think about this for a moment. Andrew knew that Mamdani was going to be on the ballot on the Workers' Family Party line. He knew that. He knew I was going to be, as a Democrat, on my own line. He knew that. So why would he also do an independent line? He created this scenario because he thought by doing so, he can force someone out of the race.
Are you saying that Andrew Cuomo created Mr. Mamdani's campaign?
He created this scenario that created an opportunity to divide the vote instead of being unified around Mamdani. This was his creation, and it's typical of how he create these scenarios. We're not going to succumb to that. He had his chance, $25 million he spent. He got his message out. He didn't campaign. He didn't go out and interact with voters. He created it. Now it's time for me to have an opportunity, and we will win and beat him.
Has Governor Cuomo asked you not to run, or have you asked Governor Cuomo not to run at this stage?
Both. When he spoke, we both interacted, and I said, you should step aside for the good of this city. We both agree the city will move in the wrong direction under the primary winner, and I think he should do the right thing.
If he doesn't do the right thing from your perspective, would you run as a Republican?
No, it's Curtis Lee is the Republican primary winner. He's the winner of that party. It's too late to switch that right now. I'm going to get votes from all New Yorkers, because when New Yorkers want safe street, they're not asking if they're Democrat or Republican. They want their streets safe.
The constant theme, Mayor, of our interviews and surveillance has been committed to talking about this debate with its national ramifications. And you mentioned it earlier, the New York Police Department. As a general rule, I'm speaking as an amateur, we're 3,000 down on the body count of the New York Police Department. What are you going to do day one on a second-term mayor to get the NYPD back to a forward motion?
Well, that urgency can't happen on the re-election. It's happening now. We're in the place to bring on 4,000 more officers.
By when?
They're starting now. We have a class that's in now. By the end of the year, we're going to be substantially higher. And part of the problem is a lot of the large classes, we saw a attrition. We saw a lot of officers retiring. That is why it was imperative as the mayor that I settled a good contract with our union members.
Eric Adams with us here, the mayor of New York City. We welcome all of you nationwide. How you listen on your commute. Good morning, 99.1 FM in Washington, 92.9 FM in Boston, and of course, Bloomberg 1130 here in New York. On YouTube, our new digital platform, Mayor Adams watches every day. Subscribe to Bloomberg Podcast. Paul?
Mr. Mayor, let's talk about immigration. Right off the tip of Manhattan, we've got the Statue of Liberty. That means a lot to a lot of New Yorkers. How do you think about immigration in this city, and maybe how does that differ from what President Trump thinks about immigration in the city?
And you're right, that statue represents a lot, and particularly when you look at the fact that my 19-year-old uncle died to protect the right of being an American in the Vietnam War. But think about this for a moment. Coming here, you should not be inflicting violence on undocumented New Yorkers or documented New Yorkers. We manage a humanitarian crisis with 237,000 migrants and asylum seekers. Not one slept on our streets. Every one of those children were educated in our school system. And I'm going to coordinate with federal authorities to go after those who are dangerous, like the Venezuelan gang members we took down that were selling drugs, forcing women into prostitution who were undocumented. The law does not allow us to collaborate for civil enforcement. We won't do that, but we will collaborate to go after dangerous people.
I should mention again, good morning on Bloomberg Television with Katie Greifeld and Sonali Basak as well. Mayor Adams, here's the headline. I talked to Lauren Emmaus, and this is just so important within her expertise of this city. The LA Times heavily armed immigration agents descend on LA's MacArthur Park. If I'm having a beverage at the Sunset Tower Hotel, I look across the opulence of LA to a really tough part of town. And the other day we saw military enforcement wrapped around these deportations and ICE marching across MacArthur Park in Los Angeles. If the critics to you will say you're in Trump's back pocket, how are you going to push against the president and his administration if we have those tensions in New York?
You know, one of the best saying is if you tell a lie long enough, you think it's true. But we need to deal with the facts here. We took this administration to court on things we thought were wrong more than any mayor in the country, more than any mayor in the country. But when I needed the president to lift the stop work order on a multi-billion-dollar wind farm project in Sunset Park, 1,500 union jobs, 500,000 homes would have benefited from it. I flew to Washington, had a healthy conversation with him. He lifted the stop work order. Same relationship I had with President Biden, 10 trips to Washington, 2 meetings with the president to deal with law enforcement officer. I nicknamed myself the Biden of Brooklyn. I work with presidents. I don't war with presidents. I have to deliver for the city of New York. And it would be irresponsible for any mayor not to do that.
But then to the granularity of this election and this, it's like Lindsay in the 1980s or something. I can't keep track. Is Adams an independent, a Democrat, a Republican? What is he? We don't know this one. He's an independent. I'm kidding. Mayor Adams, my team is listening to this interview, and there has to be a clarification of your relationship with the President of the United States. When will we see that?
I think you're seeing it now. You're seeing a mayor that's defending and fighting for his city in a responsible way. New York City is the largest city in America. And if you're going to be the mayor of that city and you are unwilling to communicate with the President of the United States, if it's Biden or Donald Trump, if it's a Democrat or Republican, that's irresponsible. Governor Hochul went to Washington several times. Mayors across the country are going to Washington. And so for anyone that states that the mayor of the largest city in the country should not be communicating with the White House, that's irresponsible. You're not delivering for your city. I must deliver for New York. That is my primary goal, and that's who I respond to.
Mr. Mayor, in terms of delivering for New York City cost of living has always been a key issue.
Yes.
What is the plan? Is there a solution here? Because every day people keep coming into this island of Manhattan. How do we house them all?
2021, when I ran for office, the top issue was public safety, and housing followed that. The reason you're seeing other conversations come on the floor in this election is because we solved the public safety problem. You see with Commissioner Tisch, we have the lowest numbers of homicide.
Let me interrupt. I will state where I live, folks. I can state it's not as bad as it was 18 months ago. I still don't like it. But Mayor Adams, I'm going to cut you some slack here. It's better than it was 18 months ago.
4.6 million people take our subway system every day. We have an average of 5 felonies a day out of 4.6 million. Okay. These police officers are doing an amazing job of keeping us safe. But the issue of affordability, I know it so well. I grew up in poverty. The primary winner grew up in luxury. Yet that same luxury he grew up in, he's stating that we should not have a financial ecosystem. I want the person that drives a limousine to have prosperity in the city, and the person that sits in the back of the limousine. That's the city I want to live in.
The zeitgeist here, and again, Lauren is briefing me on this, is you came into office and there was this scandal, that scandal, that. I don't even, it's old news for me. It's water well under the bridge. But there's a zeitgeist now that you need to get a new team as the next mayor, maybe involving some of those people in limousines. You teamed up with Ackman, Loeb, and the others within the financial business. If the other guy's elected, Mamdani, where, John, are they moving to Coral Gables or to Miami? Which is it?
Both.
This is serious, Mayor, this is serious stuff. You've got a mandate for how many millions of people are under your watch?
8.5 million New Yorkers, 320,000 employees.
I want you to talk to the 100,000 fancy people in those limousines right now. How are you going to get them not to move to Florida?
Well, first of all, we're going to win this race. And in my reelection, we're going to continue what we have done. In New York, as we talk about this business channel here, we have more jobs in the city's history, more small businesses in the city's history. Bond raters raised our bond as they saw us navigate out of COVID, migrants and asylum seekers, crimes. When you take 22,000 illegal guns off the streets, 100,000 illegal vehicles that were used in current criminal behavior, you have stabilized the city. The economic stimulus package of the city is public safety.
Right. Well,
Mr. Mayor, given where the polls have you now, whether you believe the polls or not, what is your path to victory, do you believe?
New voters. 91% of the voters did not participate in this election. We have a substantial number. We're going to register 1 million new voters over the next few months. And everyone is talking about the excitement that is felt over the primary winner. What they're missing is the excitement that I am seeing every day of those who say this can't happen.
How do you run against Mr. Mamdani?
I'm sorry?
How would you run against him? How will you run against him?
You have to do it in layers. You have to look at the various communities. Right. And when I say communities, I'm not talking about a geographical location. I'm talking about issues. I met with 250 bodega and supermarket owners yesterday. A government-run supermarket would devastate their business. I met with 250 of the 700,000 small property owners. Can you imagine telling a small property owner that you can never raise the rent so that your rent rolls no longer equal the repairs of the building? Those small property owners are going to lose their property. All of these different communities are now waking up and realizing what his policies would do to them individually.
I'm going to make this the final question and come full circle to where we were before. And again, thank you so much on Bloomberg Television Worldwide for being with us. The distinction of this campaign is the kid you were, and it was a train wreck. When did your life turn around? Well, how old were you when your childhood became you as a police officer? What was the age where the tipping point was?
About 19 years old.
The parents of that 19-year-old brat, whoever they are today, they are voting for the tradition of Mario Cuomo. How do you get them to shift from Mario Cuomo's son over to Eric Adams? How do you get that conservative, black, public safety electorate to turn and vote for you?
Well, they voted for me in 2021. And remember this, as we reflect on this election, of my first job at 12 years old as a paper boy, then becoming a dishwasher, then working in the file room of Blue Cross Blue Shield, working in the file room of Pete Mitchell. That long legacy of blue-collar work is helping me understand the needs of the working class people in the city.
Mayor Adams, thank you so much for joining Bloomberg today.
Great to be
greatly appreciated. He is Eric Adams of New York City.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Julian Emanuel working with Ed Hyman at Evercore ISI. You people have seen a grinding equity market before. How do you interpret it, and how do you get on board a grinding market I can't catch up to?
It's an incredible challenge. In fact, this is one of these times where whether you're overinvested just right or underinvested, and I promise that if you feel underinvested, you feel bad, but there's emotion going on here, okay? And so what you really need to do is focus out on the long term, because let's face it, at this point, with the market grinding, stocks are very expensive.
Take us into the trenches of ISI. You're sitting there April 2nd, April 3rd, April 4th, Liberation Day. Ed Hyman's got the big fat black pen in his hand, and you guys are trying to create a newsletter. What did you say in early April?
So there were two things that gave us conviction that you should be a buyer in April. Number one, Ed and the econ team never, ever thought there was going to be a recession. And in fact, we do a Friday webinar that 1,000 clients tune into.
Ed Hyman doesn't do a webinar, does he?
The best 30 minutes on Wall Street, and I know you all want that title.
Wall Street Week was never a webinar with Lou Rukeyser. Continue.
But at that time, that week in April, 81% of our clients thought we were either in a recession or one would start in the second half, and the data was never there. And from the strategy side, we saw the volatility explode to levels that really were consistent with past turnarounds. At the same time, the volume exploded. At the same time, the bearish sentiment was just off the charts. And those combinations, particularly the idea of no recession, means you got to buy.
4 elements that kill a structural bull market. That's in your note here today. What are those, and are any of them out there?
None of them are out there at the moment, Paul, which is why, again, it's such a challenge here, and why, frankly, stocks have become as expensive as they are. The rebound from that sentiment trough in April, because we knew there wasn't going to be a recession. We still don't think there's a recession. We do think that there's a slowdown that continues in the second half. The second is what we would call an uncooperative Fed. By uncooperative, we mean hiking. Look, they're not going to hike. There's no inflation reading we can see in the next several months, however high, where they will hike. They may cut less, but they're not hiking. The third would be longer-term yield spiking. Let's face it, the 10-year yield, it's 430 every day of the week for the last 2 years. And that's how it is. And that's a good thing. And that's part of why investors have had enough confidence to bid up stocks. And then the last one is the one that we think that eventually will end the bull market cycle. And that's a period of FOMO and capital markets activity. Every single bull market has that in the late stages. You're starting to see a little bit of FOMO. And frankly, the capital market cycle is percolating, but
the capital market cycle, when we blow up, it's always Paul Sweeney's fault. I mean,
exactly.
we know that.
Think about the late 90s. I was front and center there, folks. Valuation. Boy, this market seems expensive to me, and I'm not sure the earnings growth is out there to support it. What do you say to those folks?
We say the following, okay? It is expensive. There's no question about it. But when you actually look at the set of circumstances that caused the roller coaster to, have the scary ride down and now the grind back up, this has happened a number of times in the past when you haven't had a recession. 18 months later, the market is on average 26% higher. But the flip side of that, and where we think people need to be cognizant now, is there are pullbacks. It comes with volatility.
I look, Julian, at this, and it's the heritage of Ed Hyman over decades. And I think what Mr. Hyman would say is, you know what? American companies adapt. If they're adapting, and particularly away from the tech darlings, are they adapting to margin leveling or persistency, or dare I say margin expansion because of AI and general productivity?
No question about it. AI is a tailwind. But actually what's more interesting, if you look on the screen today at the positive response in the airline stocks, and that is a tribute to the fact that if you go back to April, all of those companies were appropriately cautious in their guidance. And in this environment, when you set the bar low enough and you get results that in other conditions might be good, or, but these, really beat expectations, and basically confirming the fact, as you said, that planes are full. And frankly, technology is one of those areas that the airlines are exploiting.
Well, I'll get one in here because I don't own any equities.
I love this one. If you use options, you buy options when the VIX is low, like now. You buy stocks when the VIX is high, like in April 25 and August 24. So we're buying options now because we've got the Tom Keene Memorial VIX below 16.
Right. So basically, again, this is the way that you keep your emotions in check when stocks are trading close to 25 times earnings, and we know they're expensive. They can get more expensive because those elements causing the end of a bull market aren't there. But you buy options, A, because if the market runs away, you're participating, and B, they're cheap enough that if the market pulls back, You're hedged.
This is great, Paul. With Ed Hyman and Julian Emanuel, it's like Mandalorian. I mean, they're sitting there and they're in a meeting with their interns, and Ed Hyman's going, "This is the way." Julian Emanuel, thank you so much.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, "Alexa, play Bloomberg 1130."
Andrew Sheets from London in with us with Morgan Stanley, their chief cross-asset strategist, really competent at the architecture, the underlying mathematics of global Wall Street. We're thrilled that Andrew could join us. Are you still based in London or are you here?
I'm still based in London. Yes.
You're visiting?
I'm visiting, yeah.
Okay, great. What is the integrity of the market right now? When you look at the four derivatives, co-movements, if you will, not kurtosis and that, but if you just look at the underlying financial architecture of the market, is it normal now?
Well, I do think we've still seen, up until recently, still a lot of uneven leadership. I think you've had this real tension between, on the surface, what seems like an incredibly strong market, equities at all-time highs, credit at kind of near cycle lows. And yet that equity strength has been more narrow. That equity strength has been more defensive and quality led. And that remains our view at Morgan Stanley. We prefer the U.S. over the rest of the world. We prefer large caps over small caps. We've still had that quality bias, as I still think the market still has to go through a period where growth is decelerating in the second half. So this is still, I think, a constructive backdrop in the sense that, like we just heard from Julian, we also don't think we see a recession this year. We do think the Fed is going to cut more than the market expects through the end of 2026. But those Fed cuts don't arrive in 2025, in our view, and that will still, I think, encourage a quality bias.
I saw somebody yesterday, I want to say Michael Feroli, but I'm not sure. Oh, they're not looking for a cut till December.
Really?
When's your first cut?
Our first cut we don't have until the end of the first quarter of 2026. In 2026.
Who let him in the room?
Yeah, who let him? So, Andrew, we saw some pronounced movement of flows out of the U.S. into rest of world, including European equities earlier this year. Was that a trade? Is that a longer term play? How do you guys see that when you talk to your clients?
Yeah, so I do think you have kind of multiple factors kind of overlapping there. So I think we are in the dollar bear camp, and more so than I think the consensus. We at Morgan Stanley are forecasting the dollar to weaken by 8% from here over the next 12 months. So, but we don't think that's necessarily investors, fleeing the U.S. per se. We think that is investors realizing that the dollar just doesn't have the defensive characteristics it usually did.
Why is that, do you think?
I think it's a mixture that U.S. policy has become more uncertain. Trade policy has become more uncertain. U.S. growth relative to the rest of the world has become worse on our forecasts. And we also think that if the Fed can't cut this year, and we don't think they will because inflation's going to reaccelerate a bit as tariffs come on, they might have to cut a lot more next year. And if they cut a lot more next year, that that rate differential that was so beneficial, the dollar will narrow.
Okay. Globally, you're cross-asset strategist. You're in London. You can do anything. Where do you guys see the best value here right now?
So in a relatively unexciting way, we think this is a pretty good environment for duration. We think that rates have backed up a bit here.
Whoa. French 50 years? Or are you buying perpetuities? What is this, a Charles Dickens novel?
We're actually a little bit cautious on France relative to the rest of Europe. But, I think the ECB will continue to cut. We think the Bank of England will cut in August. We think that, ECB has a single mandate, which is inflation. Inflation is going to continue to come down in contrast with the U.S. We think that will support European duration as you have slower growth, you have lower inflation. And in the U.S., we think the rate market will kind of look through this temporary rise of inflation to say, the growth is going to be slowing down. These tariffs are attacks on the consumer. Growth is going to slow. The Fed will have to cut more.
Let me ask you one more asset question, then I want to talk about London, because a huge body of our audience, pro and non-pro, are really curious about the state of Andrew Sheets, the city. And if I can talk, as we did with Julian Emanuel, about this modern frenzy, which was invented in the Brown math department years ago, of trying to be smarter than the market in market timing. Andrew Sheets on the BS of market timing.
So I think what is challenging is that if we look at trying to quantify that question, can we come up with indicators that give us a better than average odds of thinking about short-term direction? I think what you find, or what we've found, is that those indicators work well or better under fear, under extreme fear. Your previous guest referred to kind of April 2nd. You can find signals that work on average more often than not under extreme fear to give you short-term buy signals. It is very hard. We have been unsuccessful, much less successful, to give you sell signals. It's much harder to call tops. It's much harder to find indicators that successfully do that.
I can't bottle what you just heard. For the kids on Global Wall Street, what you heard is on the edge of Taleb 101, the certitude of dealing with a Gaussian bell curve mindset.
Boy, where are we going here?
And Andrew Sheets and I are walking log normal. It's so hard on an asymmetric log normal to get it right when Greenspanian quiescence is there.
And I think this is the challenge, that in bull markets, right, the reason I think that short-term timing works better under fear is that people get afraid at the same time. They panic at the same time. People don't get euphoric at the same time.
Okay, it was great to see you in the front row, or up a couple behind the celebs, when Emma went down in flames at Wimbledon. Give us a state of the city right now in London. You're one of our most important voices there. There's this doom and gloom. Woe is me. The United Kingdom is going to roll over and fall into the Channel. I don't buy it for a minute. And Paul says it's buoyant. Is it?
Yes. I mean, we're constructive on the UK economy. I think relative to consensus, we think the Bank of England will cut more than expected. And look, we're talking about a 7% deficit to GDP in the US. We're talking about 5% deficit to GDP in France. The UK is at 2.5%.
Is it too austere? That's the heart of the matter.
Well,
coming out of the crisis, are they addicted to the austerity of an old world mindset?
So maybe, but that means weaker growth. That means the Bank of England can cut more. The government has time. The government has a large majority. And if you can get those rates down, and we think that inflation is going to fall more than expected in the UK over the next 12 months, you get lower rates, you can help stimulate a lot of those rate-sensitive sectors in the economy. So, and I think the UK can also benefit some from, kind of global knowledge workers looking to move around. It's an attractive place for long-term investment. We're bullish on the UK pound for a variety of reasons.
Tom, the next time you and I take surveillance over to London, we're going to go out to the Docklands, out to the Canary Wharf.
Is that still happening? Is it happening?
It's happening more than ever.
Yeah. And we're going to go
the
to
Docklands is still happening.
It's happening. And we're going to have lunch at the Gun. It's right on the River Thames.
It's a great pub.
And we're going to have lunch with Andrew there. That's what we're going to do.
Done.
See? That's how we roll. Andrew.
Reto's going to write that?
Oh, yeah.
He's
going to know. Yes, he will. I will throw that down, and he's not going to worry about it. Andrew, what does the U.S. Federal Reserve need to do? Is the Federal Reserve behind European central banks, the Bank of England? How do you view that?
So the Fed has a dual mandate, right? Full employment and price stability. And I think you heard this from the Fed minutes. They're doing much better on full employment than on price stability. Mm-hmm. They think the economy's strong. You still have an unemployment rate that's down in the low 4s, and yet core PCE is still above their target. If our forecasts are correct, it's going to start moving up again a little bit. So in that context, you're not running policy that's too tight. You're running appropriate policy, and we think that keeps them on hold.
Can I do an audible? Because you're so darn good at this. Andrew Sheets, folks, on the pharmaceutical wave from Europe, one of the great unknowns for Americans, having Mike Pence of the Eli Lilly Indianapolis on minutes ago, the former vice president. We underestimate the pharmaceutical wall of Europe, Ireland, the United Kingdom, and the rest of it. What are the Trump pharmaceutical tariffs going to do to the transatlantic balance?
Well, it has an inflation channel because, healthcare spending is a big part of the economy. This is, again, I think something people should consider when looking at Europe as a market to invest in, is that we talk a lot about the concentration in the U.S. market. A lot of these European markets are also very concentrated, with very large cap companies having very large shares within these individual markets. So, again, that creates some idiosyncratic risk and can mean that some of these individual tariff decisions have even larger overall market impacts.
What was the name of the pub?
It's called The Gun. It's in Docklands, right on the River Thames.
Our question today, Andrew, when you grew up, just pristine at mathematics and your legend at Brown, which Kellogg's cereal did you partake of anymore? Were you a Fruit Loops guy?
I was never allowed Fruit Loops. No,
You were never allowed.
I was
either
never
was
allowed
I.
Fruit Loops. I was
household.
kind of a Cheerios General Mills person.
Oh, there we go. It's more Midwest feel.
Yep, absolutely. Kellogg's big premium today.
I remember, I went to college and I was told that Raisin Bran was only for adults. My father got so sick and tired of us eating all the Raisin Bran. I actually went to college thinking it was like an adult cereal. Andrew Sheets, this is special. Thank you so much. In our studios here in New York, he's a massive value add each morning to Morgan Stanley.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
This is a joy. Let's get right to it. We got a busy schedule. Dominique Toublon is with us right now, head of U.S. credit strategy at Barclays. I have to take an audible here. You're out of Bern, Switzerland, right?
That's right.
I was there when I was a kid. It's where the bears are, right?
That's right. There's the old city and there's bears at the end.
Ancient city, and it goes back to the heritage of Swiss mathematics.
That's right.
The last conversation I had with the giant Alan Kruger of Princeton, we were both reading together a biography of Euler.
Yeah.
And the math of the time, and all of this, folks, is out of Switzerland. When you bring your mathematics into the U.S. credit market right now, is it a normal market with these debts and deficits?
So on the corporate bond side, the technicals are so strong that
And the spreads are tight as a
the
jargon.
spreads are tight. There's very little room for error, don't get me wrong, but the technicals are really strong. Just give you one number for investment grade in the US. The next July, August, the next 2 months, we have $220 billion of maturities and coupons. Guess what is the highest July, August issuance ever? 2020, $220 billion. So we would have to get to record levels to provide some supply to the market. So in a short-term perspective, yields are fine. The base case for macro is okay. Credit fundamentals are fine. So what's disrupting this?
But Apple can come out with a $220 billion bond issue tomorrow and make
220 would
calls.
be a bit large, but yeah.
In one phone call, these guys could get it done. Dominique, I'm looking at the INGO function on the Bloomberg terminal. It gives me nice total returns across the fixed income space. Yeah. U.S. corporate high yield's been the best performance. I mean, people have no fear of any credit risk out there, do they?
So there are differentiations. So if you look at double Bs and single Bs, people are really on it. Again, if you look at credit fundamentals, it looks fine. Companies have lowered leverage a little bit. Interest coverage is picking back up, and profit margins are high. However, if you go to lower rated stuff, to triple Cs, it's not quite true. There are differentiations in there, and people are afraid of the tail risk. And that all happened post-Liberation Day.
So where are we going for value today in the credit space? Because smart people like you have been telling me spreads are tight, but I'm like, spreads, let's go buy some high yield here. Where do you see value?
So I think you want to look at the laggards. So
the laggards.
In investment grade, the cyclicals have lagged. In the leverage finance side, single B loans look good because the high yield bonds, as you said, have rallied quite a bit. And then if you feel a bit more, gutsy, go to some triple Cs that you think are interesting.
But isn't retail and frankly institutional basically scared stiff and they're all buying the 2-year full faith in credit?
It's, again, you've been getting a little bit above the treasury, not a ton compared to history, but do you want to leave that on the side? If you look at the volatility of returns in investment grade, let's say, versus treasuries, it's actually lower in corporates than in treasuries. So you get high yield and lower volatility. Not bad.
We got such a busy morning, folks. We're going to get a couple more questions in here with Dominique, and we've got economic data coming out. We're just going to glance at claims for a full, if it moves the market, we'll mention it. Dominique, Paul, 2 more questions of Dominique.
I'm looking at the University of Bern. It is literally right between
it's very
Geneva and Zurich. I mean,
Yeah.
It's awesome right
Well,
there.
can we do an audible here?
We're doing a remote from the University of Bern.
Okay, explain to me. This is how I met John Farrow, is when the SNB intervened here on the success of Switzerland. Is Switzerland back to 2015, where it's just so damn good they have to unilaterally act to depreciate the Swiss franc?
It's been doing a good job in terms of education, in terms of deciding who goes to apprenticeship and who goes to kind of higher education and pushing the envelope that way. Manufacturing is strong, obviously pharma is strong, and then obviously all the bank stuff. But to your question, locally the issue is that we just had a colleague in Asia in FX. Swiss francs is the only one that people want to touch now. They're afraid about many other things. So there might be some pressure there that they have to do something indeed.
Okay.
What do you think is the Federal Reserve going to do next?
So we think that, inflation pressure is going to pick up August, September, and growth is going to be also 1%. So they'll do a cut in December, but they will wait till December to do something.
Where are you based?
I'm based in New York. I have all my finance career is in New York. Yeah, as I said, I was in Bern. Einstein did all these big discoveries in Bern when he was there at the time.
I mean, I love the book on Euler. I don't have it in front of me. I'm sorry, but
it's great. Euler is one of the best mathematicians ever.
There's this whole French, stuffiness. You saw that with Macron and the King over French mathematics, and the Swiss were rocking it when they invented basically finance.
Looking at it right now, they'd love to have us there.
Absolutely.
Sure. Okay.
Anytime.
Or Genève.
Yeah. I mean,
we could look over at the Dent de Midi.
Yeah.
Dominique, don't be a stranger. Dominique Toubon, head of U.S. credit, award-winning Barclays, and they're in the ISI survey.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
With us, David Sowerby. Thrilled he's in our studios. Usually it's from the Midwest. He's one of the great optimists on American capitalism within. Cora, from where you sit in the Midwest, is the American job economy still in place, or does it finally break?
It's still in place. Michigan's unemployment rate a little bit higher than the U.S., but the great American success story continues. And in particular, just look at corporate free cash flow margins. They're still well above average.
I watched that. That's something I really look at. Nancy Lazar sat in your seat yesterday, the great economist, and she said, we will see a capital investment renaissance led by your Midwest. Do you buy it?
Absolutely. The state of Michigan, 12th most competitive state on tax climate per the Tax Foundation.
Oh, I thought you were going to say NCAA football. Excuse me.
They're higher than that.
And Nancy has been writing about that manufacturing renaissance in the Midwest for a number of years. She is spot on.
Battle Creek, Michigan, one of the greatest city names I think there is in America. Battle Creek, Michigan. It's home to W.K. Kellogg and Company. They're in the news today. As a Michigan person, Detroit person, what do you think about the sale of W.K. Kellogg?
It really goes back, Paul, to the fact that in small mid caps, you're going to make your best returns buying spinoffs, like the Bloomberg Spinoff Index. So Kellogg split into the cereal division, and then they split in the second division was Kellanova. I bought Kellanova. They're being acquired by Mars at a 45% premium.
Right. That's right.
Kellanova is Pringles, Cheez-Its, and Pop-Tarts, which rivals the earlier discussion of Apple Jacks and Cheerios and Frosted Flakes. So spinoffs are a great story. It's playing out with Kellogg.
Are they bolt-ons from our Ute? Is it the same game, the same banker's shell game as 30 years ago?
You unlock value by spinning off divisions. Maybe the smaller division no longer needs to feed the big company beast, stands on their own, and that's been a great success story in small mid caps over decades.
So do you try to find companies that are about to engage into some corporate restructuring, or once they've already been spun off, you try to pick one that has the best value?
You really look at all the spinoffs that are coming. You get the news, which ones are likely to spin. Then you do the digging. Very often only 2 or 3 analysts are following the company in the eventual spin. People inherit the spinoff stock. They don't want to own it. They sell it. It creates a buying opportunity. So the 2 great formulas are spinoffs and underfollowed stocks where only 2 Wall Street analysts follow the company.
So where are we today in that kind of environment? I mean, I kind of see Wall Street shrinking their research budgets. It feels like there's fewer analysts following companies in general. Does that make your job easier, harder? How does that work?
Probably creates more alpha, excess return opportunities, because how much value can I add with the 50 analysts who follow Apple? But if I can dig into a company where only a couple analysts follow it, I can have a more direct pipeline to the company itself, the CEO and the CFO. They'll often ask us for advice on What do we need to do to get our stock higher, whether it's buybacks, get out on the road? If you're willing to do the work, the alpha is there.
What do tariffs mean for you in your research analysis, and your
question.
investment process? Is that something that it's kind of got to go company by company, or is it just, I got to lower my valuation outlook or something?
I think it's the overused term of idiosyncratic. You really have to analyze the company. We'll be right into that quickly with the earnings news that are coming out. Ultimately, these tariffs are going to cost us about $300 billion, maybe. 70% gets passed on to the consumer. So that's a tax increase. I think this permanent tax cuts make us 2 steps forward. Tariffs take us 1 step back.
Right.
It's nothing short of a tax increase.
I got to
Bad
get this
policy.
in quickly, and then we got to finish up with these bolt-ons that you're looking at, like Kellogg and Kellanova and Cheez-Its and Cheez-Its. Cheez-Its is a Dow component. Tell me here, David Sowerby, with the misconception of the American auto business. You're like expert at this. What's the thing people like me get wrong about the Midwest and auto manufacturing?
In the last 5 to 7 years, the car companies, GM in particular, Ford too, are better allocators of capital, generating free cash. They're not doing misguided acquisitions like Saab or Jaguar, you name it. They're just better allocators of capital. GM is now again growing the dividend. They're just managed much better.
Are they a Sowerby buy?
They have been at times. You date the autos, you tend not to marry them. And I think that's the story with the autos. But I think Wall Street still needs to get better on the free cash flow generation of autos.
I got folks at the beginning of this conversation. Cheez-Its, one day in the middle of 2024, a year ago, enjoyed a 38% lift. Where's the next Cheez-Its, oh wise one?
Well, I'll give you a couple of companies. One is Ryanair. It's a
Timber
lumber
company.
REIT. Yep.
Okay.
Mostly in the South, a little bit in the Northwest, headquartered in Jacksonville, Florida. They're selling their New Zealand timber property. That's going to generate $700 million in cash. They're going to grow the dividend. It's a 4.5% dividend yield today, so it's a little better than a 10-year, when dividend growth would probably be double digits.
One more.
Northwest Energy, Montana, Sioux Falls, South Dakota, Yellowstone Park, free cash flow is now turning positive.
They own the grid at Jellystone Park.
They operate there. They're getting better rate relief, power demand, 5% dividend yield, free cash flow positive. Right. Only one analyst follows the company.
They're not at Sun Valley with the Allen and Company.
Sioux Falls, South Dakota.
Sioux Falls, I love it.
That's where you go.
We got to keep this going, folks. David Sowerby, one more.
How about Houlihan Lokey, a name we've talked about before?
Yeah.
M&A, restructuring, valuation. They're number one in all three of their business silos. Right. Really a small cap name, mid cap name that people really don't follow as well, but they are number one in their categories: restructuring, valuation, M&A.
Hugely valuable. Yeah. David Sowerby, thank you so much for the inquiry.
This is the Bloomberg Surveillance Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.